DoubleDragon is currently executing a buyback of MerryMart shares, offering retail investors a 20% premium over the recent market price. For those holding MerryMart in their portfolios, this isn't a suggestion, it's a choice with a deadline. You have to decide if this premium is a timely exit or a chance to reposition your capital within a $217 billion group. The strategy is led by Edgar Injap Sia II and Tony Tan Kak Tiang, two builders known for rapidly scaling local startups into national household brands. This decision is time-sensitive. Retail investors are facing a strict window to either accept the buyout or remain with the company as it integrates into the larger group. To understand the timing, we have to look at DoubleDragon's 2021 corporate shift. They moved away from being a pure-play real estate developer to become a diversified investment holding company, setting an aggressive target of $500 billion in total equity. MerryMart represents the high-frequency consumer component of that ecosystem. It's an essential retail platform that generates over 7 billion pesos in annual recurring revenue from groceries and pharmacies. While the business generates consistent cash flow, the stock price has softened since its 2020 IPO. This market disconnect allowed DoubleDragon to step in and consolidate its control over the retailer. By folding MerryMart directly into the group, DoubleDragon isn't just buying stores, they are securing a high-volume cash flow engine to support their international hotel and warehouse expansions. This buyout was triggered by a specific regulatory mechanic. Because DoubleDragon acquired a 35% stake in MerryMart from Injap Investments, SEC rules require a mandatory tender offer. This ensures that small shareholders are offered the same exit price as the majority owners. The offer is set at 0.48 pesos per share. For shareholders, that's a 20% gain over the 0.40 closing price recorded just before the announcement. The official report confirms the timeline. The tender offer period begins on May 18th and closes on June 16, 2026. However, there is a catch to how you get paid. DoubleDragon is using a 50-50 hybrid settlement structure rather than an all-cash buyout. Half of the 0.48, that's 0.24, will be paid in cash. The other half will be paid in DoubleDragon common shares. This structure allows DoubleDragon to acquire the retailer while keeping its cash reserves liquid for its global Hotel 101 rollout. This hybrid payment creates a paradox. While DoubleDragon is paying a premium for the retail shares, it is using its own stock to do it, and that stock is currently priced well below its book value. For the equity portion, DoubleDragon shares issued to you are valued at $9.30 each, but DoubleDragon's latest book value is $19.21 per share. These shares are issued at a 52% discount to the company's audited asset value. This creates a direct synergy between the groups. By plugging a high-volume retail business into a heavily discounted real estate holding company, the founders are attempting to build a resilient, multi-format ecosystem. For the retail investor, the stock portion isn't just an exchange, it's an entry into a AAA-rated parent company at nearly half its intrinsic value. Now, you have to look at your own portfolio and make a decision. Do you accept the tender offer, or do you continue to hold? Path A is the tender. You take the 20% premium, lock in the cash half, and convert the rest into DoubleDragon shares at that 52% discount. This path effectively upgrades your investment from a specialized grocery retailer to a diversified holding company with interests in hotels, offices, and warehouses. Path B is the hold. If you do nothing, you stay a minority shareholder in MerryMart. You are essentially betting that the business will grow faster now that it's a direct subsidiary of the larger DoubleDragon group. If you choose to sell, you must finalize the paperwork and submit your shares before 5 p.m. on June 16, 2026. This analysis is for educational purposes. Consult with your financial advisor and perform your own research before executing any trades. Where do you stand on this deal? Are you going to hold your MerryMart shares or fold them into the offer? Let me know your strategy in the comments. Don't forget to like and subscribe for more deep dives into the Philippine markets.